Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Jake Clopton on from Clopton Capital, and I'm looking forward to talking with him. It's a very interesting combination of finance and solar and all kinds of things. So Jake, glad to have you on the podcast today. Love to have you. So if you could just kind of go through a little bit of history of how you got started in this business and where you are today.
Yeah, sure. I started this business about 15 years ago, which was like the financial crisis era, right?
Yeah.
At the time, I used to trade like interbank hedging product futures, specifically 3-month LIBOR and Fed fund futures, stuff like that. That whole game kind of dried up very quickly when the crisis hit, just like everything else did. So the idea at the time was that there was nobody lending, right? It was a credit crisis, and I had the idea to create a business around helping people find liquidity and loans and credit. I had never worked in real estate before, and I hadn't worked in banking before. There's just my idea, and I came up with this idea, and I didn't realize it already existed. But I started making phone calls and cold calls to like banks and anybody who had money to lend, and people at the time, if you just had money to lend, people would come to you. And since that time, it really very, very quickly within the first year formed itself into like commercial real estate finance. And I've been doing that ever since. Today, we're not just a finance company. We're more of a commercial real estate services firm. And you mentioned we've got a couple different services. I run all the capital markets still. We're also a nationwide commercial property insurance company. We do commercial solar installation. We're a 1031 qualified intermediary. And we're also adding real estate brokerage here pretty soon. So really trying to, be involved in every aspect of the commercial real estate life cycle. That's really the idea going.
That is fantastic. So you lived and grew up in Boston?
So I grew up in Rochester, New York.
Okay.
Which is about a 40-minute drive from Buffalo, and then went to school in Buffalo. I had bounced around a little bit after I graduated. I lived in Argentina for almost 2 years.
Oh, okay.
Then I worked at and did accounting for a resort in Florida, and then moved to Chicago to trade futures.
Yeah,
and been here ever since.
There. Oh, you started out trading futures and then got into the whole banking area from there. So what would you say were some of your early successes in terms of getting into the whole finance side of the equation?
It was, I mean, just candidly, just surviving. Getting into an industry that was I really didn't have contacts in. I think what was, the number one thing that led to me being successful was grit and cold calling. I don't think a lot of people are very comfortable with, cold calling and just continuing to pound the pavement until you kind of finally hit that tipping point. But that's really what it was, right? I mean, creating the network, building the relationships, and reaching out to people that I had no prior relationships with. That's what really led to the success and, led to where we are today.
Well, that.
And then I still try to do that today. Like cold calling is a skill, right? So, I mean, I'll be like, all right, I haven't called somebody randomly in a week. So
yeah, you got
random phone calls here.
You get into the habit and you want to get back to it.
Definitely. Absolutely.
Well, that is very interesting because most people that get into the real estate world don't realize, okay, I'll do some cold calling for the first month or two or something like that. But they don't realize that it really takes a concerted effort of continuous cold calling and trying to build up that relationship. So yeah, maybe it would be helpful for people to know what your standard sort of cold call approach is.
That is a good question. I used to try to target somewhere between 50 to 100 calls a day.
Wow. Okay.
Yeah.
And
it's a numbers game.
Yeah,
right?
yeah.
It is with cold calling.
So was your
Um,
standard pitch, are you looking for finance? What would you start out with?
yeah, I would really kind of start out with like a quick introduction, right? I'd be like, "Hey, I'm Jay Clopton. How are you doing? Just reaching out to get introduced. Here's what we do. Kind of get the spiel out of the way quickly,
Yeah,
and not be extremely pushy. I think everybody, especially today, right? Everybody hates telemarketers, which
yeah.
to a degree for cold calling, kind of what you're doing. You're marketing on the telephone, right?
Right, right.
So, you don't want to be super pushy. The number one thing that in my experience of what I've seen that like really deters people from cold calling is just really just anxiety about like reaching out to people. I've even, hired people in the past where I had this one guy who he would make a call and then he'd have to go outside and pace around and smoke a cigarette and, come back 15 minutes later, just wipe off the sweat and then make another call. I mean, it is what it is. I wouldn't say it wasn't nerve wracking for me in the beginning too. I guess I just didn't care. I just kept making calls.
Well, I
You're
think
gonna
that's
run.
the attitude you have to have. It's
Oh
like
yeah, yeah,
there's a real person at the other end, so you just try and connect with them and on a one-to-one basis and see if you can build a relationship. So
exactly. And just you know, even on your best day, somebody's gonna tell you to go after yourself. So it's just gonna happen.
yeah,
So
it's just
brush it
gonna
off
drop
and
the
go
phone
go
on
to the
the
next one.
yeah, and you just got to keep moving. Don't take it personally. Yeah.
Exactly.
No,
Exactly.
I think that's critical for some people to understand that if you're going to get into the cold call world, you got to kind of try and personalize it and bring it into a relationship. And if it doesn't
There
work,
is no better way to break in an industry and build your network than just doing cold calls, or going to like in-person conferences, meetings, stuff like that.
yeah,
You can do a ton more phone calls than you can meet people at conferences, like volume wise. So there's kind of a trade up there. But I mean, those are just the best ways.
yeah, yeah,
I mean, other real estate guys I know, like people that are trying to break. That's what I'd say. Like, hey, how many calls you making? Like, I called one or two people. Like, that's just not enough. Like, you need to be making constant phone calls for the first at least 2 years to
yeah,
really get it.
really get that momentum rolling. Yeah, I
Yeah.
compare it. I do you know the old Ed Sullivan show where the plate
Oh
spinner
yeah.
would come out? It's
Yeah.
very similar to that. In terms of cold calling, you got to spin the plate, and sometimes the plate just falls off, and you got to go, put another plate up there and spin again.
Yeah.
So
Yeah. Do whatever you
many,
got to do. Go smoke a cigarette, walk the
no,
block, whatever.
yeah, you just keep those plates going.
Yeah.
So
Yeah.
so that you built up your success that way. You went through the cold call series and built up, and then now you're expanding out into some other areas where you're actually adding solar into your business and so forth, financing
Yeah.
solar. So tell us a little bit about that.
Yeah. So for a very, very long time, it was just capital markets. But then, after a while, you start looking at, let's say like 12 years, 10 years, you start looking at this database of contacts you have and like the authority you built in the field and all this stuff. And you're like, what else can I do with these? Like, what else do these people pay money for? What other service do they need? Right?
Yeah,
And candidly, like the supply side of the business, which is just the relationships, is the hardest part to put together. And I've already done that, right? So I really one day just took a list or look at like a closing statement, for a real estate deal, and I was like, well, what else can we wrap in here, right? Biggest one that plays into a lot of finance was insurance, and candidly, that really fits in with what I do on the capital market side because it's an expense line item, and insurance has made or broke deals in the past. So
I,
we wrap that in. I think because of the relationships, and the trust we built on the finance side over such a long period of time, and the fact that we were generating the need a lot of the time for new policies, we did something close to like, I mean, I don't really say, but I think it was close to like $1 million in premium the first year,
wow.
something like that. Yeah, because that side really just gets fed. It has no marketing costs. It has no startup cost, right? It just gets fed business. And that's how all of these have kind of gone. The solar side, I started taking a look at utility costs, and I would start, but obviously, like all the incentives to put solar on buildings is huge, especially in Illinois here. And there's just a lot of people doing it, but it's all the same contacts, right? So it really helps a lot of our owners, reduce some of their expense side through, like lower utility costs. And, we can put together the whole thing, right? And include it as part of the initial financing package. So all these different, they're just all different tools in the toolbox that we can help with. And, we have some people that just use one service, or, I've had some people that like will just go do the whole thing. Where we want to be eventually is, like I said, we're gonna add real estate brokerage here pretty soon. We want to be working with people from start to finish, right? So that's helping find properties, finance them, do the insurance, do solar if they want. When they want to dispose of them, we can help the sale process. And then we're also a 1031 qualified intermediary. So if they're doing a tax-deferred exchange, we can actually hold those funds, and it starts all over again, right? So that's really the end goal, is to really be a single point of contact for all these different services. And because they're all under the same roof and we're all talking to each other, the efficiency is just so much more there than if you have all these different third parties that are working independently.
Well, so the insurance world is crazy right now. So how are you working with that? I mean, where are you finding the insurance? It's got to be very challenging.
Right. So what I've noticed with the insurance side and a lot of the incumbent companies out there, they for a very, very long time, insurance cost didn't budge. Right. I mean, it was like certain renewal every year, and you would just stay with the same insurance guy. Blah, blah, blah. Yeah. And they would just send you a renewal. I think those days are over. What is happening to a lot of people like now is they're getting like their renewals, like these agents, they know what they're doing. They're waiting till like 3 days before you renew. And they're just like sending you the renewal. Oh, hey, it doubled. Here you go.
Yeah.
And there's no other option, because it's like, well, I don't even have time to market this, right? Like,
right.
I'm trying to market this policy, and I just have to take it. So I've really been telling people, like, you need every year, you need to be going out and marketing this thing as wide as possible. And what we did on the insurance side is, wrap in as many markets as humanly possible, and have those resources so that we do bring this thing out to the whole market as much as humanly possible as we can, rather than just, a lot of the incumbent agents that are like working for huge companies, they don't really do that, right? I mean, they go to one or two or three carriers. Right. The insurance side is very, very similar to what I do on the capital market side. And you're just an intermediary, but it's just much less transparent.
Right.
It just is. And a lot of people don't understand it. They're like, I don't know, it's insurance. But I think generally speaking, you just need to make sure that your policy is being, marketed as best as possible. The other thing is, like a lot of these, like if you have like a smaller policy and you're with some like large brokerage company, just come to terms with the fact that they don't care. And you know what I mean? They're just going to stick you in whatever. And maybe that's not the right answer, right? So maybe go out and like find somebody like us who can market it better.
Yeah, that would care about your policy and actually find something.
Right. It's just not big enough. Right,
yeah. Exactly. Yeah. Well, that brings us to, so you do new construction financing also?
Oh yeah, that's like 90% of what we're doing right now.
Oh, really? Well, and that market has certainly changed.
Oh yeah.
Yeah. So, I mean, I've got some developers here locally in San Mateo that would love to find construction financing, but they're kind of dead in the water.
Sure.
So I'm going to send them to you, I guess, and find out what you can come up with.
Works for me.
What sort of rates are they charging these days?
It depends on the capital source.
Yeah.
Right. So our capital sources are banks, credit unions, and private lenders. I mean, for the most part, right? Yeah. Those are really the two major buckets. Banks and credit unions, every single one of them is different. Every one of them charges differently, priced differently. Most of the construction loans I see priced from, depends on what it is, like 7 up to 9%. Right? It's a huge range. Right. Yeah. Depends on if it's multifamily on the low end or a hotel on the higher end. That's where I see most of the stuff priced. Private lenders are pricing anywhere from 10% up.
Yeah.
Depends on
Right.
what it is,
Right.
where it is,
Right.
you're getting money from. I think you can just expect, to pay anywhere from probably 3 to 5% more going from a bank to a private lender, if that's
Yeah.
direct.
So what's your kind of sweet spot of somebody coming to you? What range of money works best for you?
So good question. We actually just rolled out a new platform for like smaller balance loans. That's like really streamlined. So we can actually do stuff as low as like $100,000 now.
Wow.
On this really streamlined platform, 100,000 up to like 2 million, something like that.
Okay.
That's perm, bridge, construction, all this stuff. It's really geared towards like smaller multifamily and residential stuff. On the capital markets kind of side that I actually run personally myself, we're really 2 million bucks and up from there. Perm, fixed rate mortgages, bridge loans, and construction.
Yeah.
So that's kind of how our two sides work for a very long time. It just, it's hard to put man hours into something below 2 million, but
Yeah.
we have this, partnership with a great capital provider that, it's really like a link through our website, and it works great for residential and small multifamily guys.
Yeah. What's your cap at the high end? Anything?
I mean, technically there isn't one,
Yeah.
but I would say the space that we play the most in
Yeah.
is like the $2 to $50 million space.
Yeah. That's the real sweet spot that works great. Yeah. Which is fantastic. Well, this is great. I greatly appreciate your time. I think we've covered anything else we need to mention?
No, I mean, feel free to reach out to me anywhere. I'm extremely easy to find on LinkedIn or the internet or the website. So I'm always happy to answer any questions.
So CloptonCapital.com.
There you go.
Just find it anywhere. Jake Clopton on LinkedIn or anywhere else you can find Jake. So off you go. All right. Well, thank you so much. And here we'll talk soon, I'm sure.
Appreciate it. Thanks, Chris.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.